Hi everyone, we're just getting our camera set up here. Hopefully you can see me. And welcome to the Clean Economy Alliance's webinar series. And thanks for joining us today. My name is Sarah Buchanan. I am the coordinator for the Clean Economy Alliance. And if you're not familiar with the Alliance, we are a multi-sector alliance of over 100 organizations at this point. So that includes clean tech firms, health advocates, businesses, environmental groups, labor unions, and lots of others in Ontario. So we have 4 of these member organizations here today, and we're going to talk about one of the many innovative solutions that our members have been working on to fight climate change. And so today we're talking about impact investing. So when we say impact investing, what does that mean? The folks around this table know a lot better than I do, but just very briefly, impact investing goes a lot farther than just removing fossil fuels from an investment portfolio. So this form of investing finances projects that are actually benefiting communities, people, and the environment. And it creates positive impact beyond financial returns. And today we're talking about how these green bonds can tackle climate change. So today will be 100% discussion. There's no PowerPoints today. And yes, we're going to send you a link to share this wonderful conversation with all of your friends and family and colleagues later. And we're also going to be posting it on our website. So we have some guests today to discuss this with us. I'm going to start over here on my left with Jennifer Macdonald, who is Manager of Impact Investing at Copower. And Rob Brandt will go over here just for fun, all the way to the other side. Just as I said his name, General Manager at SolarShare. And then over here, we've got Nicole Leite, am I saying that right?
Leite, yeah.
Leite, who is Impact Investing Portfolio Manager at the Atmosphere Fund, also known as TAF. And then we have Stephanie Pinnington, who is Marketing and Engagement Manager at Tapestry Community Capital, which I believe is associated with TREC.
Yes.
Yeah. Great. So just so you know, around 4:45, we are going to do a quick Q&A session, so you can get your questions in then. If you do have a question during the presentation, you can type it into the little sidebar at the side of your GoToWebinar panel. There's a little question box. You can type it in. Feel free to type it in during the chat, and then we'll get to your questions later. So we're first going to open up to each of our panelists to tell us briefly about your organization's work in the field of impact investing. So I'm going to start over on my left with Jennifer.
That's great. Thank you very much.
And tell us who you are again as well.
Yes. Yeah. So my name is Jennifer Macdonald, and I am the Manager of Impact Investing at Copower. So I work with individuals across Canada who want to add an impact investment to their portfolio. So briefly, Copower works with project developers who are trying to build more small-scale project, clean energy projects and energy efficiency projects across Canada. And we package those loans and we offer them as investment products to individuals to add to their portfolio. So to date, we have over 400 individuals, and it's my pleasure, it's also my job, but I get to speak to Canadians each day and talk about how it fits in their portfolio and how a green bond can be an impact. And so that definition of it has to have a financial return as well as a quantifiable benefit. At Copower, we measure the carbon that we offset as well as the clean energy that's produced. Right, Nicole?
So hi, my name is Nicole Leite. I work at TAF and Impact Investing. TAF is slightly different than the other organizations here in that we don't raise capital for retail investors. We have an endowment fund that we invest in projects that reduce greenhouse gas emissions. So reducing carbon emissions is our #1 target and our mandate. We have spent the majority of the past decade working on energy efficiency in buildings. We developed a really interesting financial instrument called an Energy Savings Performance Agreement that we use in pursuit of that. And we recently spun that out into a for-profit company called Efficiency Capital. So we're refocusing our impact investing right now on things related to transportation, district energy, food supply chain, and generation.
Great. And Steph?
Yeah, thanks. Thanks for hosting us today. It's great to be here. My name is Stephanie Pinnington. I'm the Marketing and Engagement Manager at Tapestry Community Capital. So Tapestry is a nonprofit social enterprise that supports other nonprofits and cooperatives in raising and managing community investment. So we're sort of different than some of the other groups here today, like Nicole just said. So we actually don't issue investments ourselves. What we do is provide a consultancy service to other organizations to issue investments or green bonds, for example, in their own name. So at the front end, that looks more like structuring their investment, helping them to meet legal regulations, putting together an offering statement, setting up the terms of their investment, all the way through to doing the actual raise. So being the point of sale to actually issue the physical bonds and help them to market their product to their community and figure out who their community investors are. And then all the way to the very back end to continue to manage those investments for their lifetime. So sometimes you're seeing bonds that are 15 years, and we can continue to manage those on our in-house software platform. So we support all sorts of different groups, but nonprofits and cooperatives, and we've worked extensively in renewable energy, but we also support nonprofits and co-ops in other sectors as well. But all of the projects that we work on have a social or environmental outcome.
And Rob?
My name is Rob Grand. I'm the general manager at SolarShare. Thanks for hosting me here today, Sarah. SolarShare, in case you're not aware, is a non-for-profit co-op. We've been around since 2010, and SolarShare currently operates 48 solar sites across the province, from Eastern Ontario and Ottawa to Southwestern Ontario, from Toronto up to Temiskaming. And we finance the purchase of our solar sites through raising money, selling green bonds. And so through the sale of green bonds, we are able to purchase and operate the solar sites. And I should clarify that we do not use the bonds in the construction phase. We only, because that exposes our investors to a certain degree of risk, we only apply the green bonds to projects that are up and running and producing revenue. All of our projects are backed by 20-year contracts from the IESO, or formerly OPG. And these contracts guarantee us a certain rate of return, a certain price on the electricity that we sell into the grid. We currently have about 1,600 member investors at SolarShare, and we've raised over $38 million in bond sales and have paid out over $3 million in interest payments to our members. SolarShare's green bond investments are a way to allow people to invest in solar energy without having to put panels on the roofs of their home, or people who live in condominiums or townhomes that don't have access to a rooftop. Our investors range from students to seniors and include foundations and faith-based organizations. As a non-for-profit, our mandate is not just to make money and sell bonds, but it's also to engage people in the conversation about solar and to raise awareness of solar energy as a clean, renewable, waste-free source of energy.
Thanks, Rob. And I will start with you again here on the side. I wanted everyone to just maybe walk us through one example. So can you tell us about a project, give an example of a project that you currently fund and how that project is reducing greenhouse gas emissions in Ontario?
Sure. All of our projects are essentially the same. They're all solar installations and either rooftop or ground mount. But to pull an example, we just launched 8 sites up in near Temiskaming, Ontario this past year, and these 8 sites are 500 kilowatt sites. And if you go to our website, solarbonds.ca, you can see how much greenhouse gas we are reducing through our solar sites. And if you add up all 8 sites, it comes out to over 560 tons per year. And people always say, well, how much power do you produce in these sites? And if you add up those 8 sites, they produce enough power to power about 800 homes per year. So that's 800 homes that aren't being powered by other, perhaps more environmentally unfriendly or emission-producing forms of energy.
Steph, do you want to tell us a little bit about, focusing on one example, how one project is fighting climate change in Ontario?
Sure, definitely. So we've worked with many renewable energy co-ops in the past, SolarShare being one of them, but I won't talk about them because they're here with us today. So another example of another renewable energy co-op we've worked with would be ZooShare.
Oh, yeah.
So yeah, they're a biogas cooperative that raised $1 million in community bonds to build a biogas digester up at the Toronto Zoo. So taking the zoo poo, which everyone loves to say, and combining that also with other organic waste and going from around the city and turning that into biogas. And they have a feed-in tariff contract, so they can pay their investors back. And through that, I don't have the specific details on the GHG reductions on that one, but certainly producing clean power and diverting waste away from landfills. So we've worked a lot in the renewable energy space, but then, we've worked with other organizations to purchase or construct buildings. So we're seeing a lot of interest in maybe the projects that have a stronger focus on producing a social outcome, but they're also looking to have an element of environmental sustainability in their project. So we're working with a group right now that wants to build a co-housing building for affordable housing for students and seniors, and they want that to be an entirely net zero building. So there are other projects outside of renewable energy that we're seeing are having really positive environmental impacts.
Wow. So, for example, if as part of my organization, I work for environmental defense, if we wanted to, let's say, purchase a building and retrofit it to be net zero, as you mentioned, we could then work with your organization to parcel that into investments that our supporters could.
Yes, definitely. So one really important thing is that a community bond is really essentially a loan from your community investors. So of course you have to have a way to pay them back. So you need that sustainable business model, but assuming you have a business model like you're going to tenant out the space and pay the investors back through that, yes, that would be the sort of project that we would work on.
Awesome. Okay. And Nicole, over to you. Tell us about an example of the great work you're doing.
Yeah, so I guess I'm going to use Steph's building example there to leap off. So something that we've done in performance contracting, which is a tool that we like to use. So we generally can invest with co-ops or other multi-residential family buildings, large buildings, and provide the upfront capital for their energy efficiency retrofit. And then we share the savings. So whatever savings they earn, they pay us a portion of those savings, and that's how we get paid back our capital. So that's something that's a tool we really like using. We find it's really palatable. And then we, again, spun that off into a for-profit company, so they do that all the time now. But that's something that we generally find with about a $500,000 investment, we can save about 300 tons a year of CO2 equivalent. So, and this is really moving us towards, Toronto's goals of 80% reduction by 2050. And a large part of that is going to be how do we reduce the energy consumption in buildings. So that's a really difficult one. And it's, again, moving towards net zero, which is great, right? But how do we get there, and how do we use off-the-shelf products that already exist, that are proven, that already are proven to have financial paybacks? And how do we blend them all together to get a higher net present value and do a multi residential building,
right? And it is quantifying that amount. You mentioned, 300 tons of greenhouse gas emissions were reduced. Is quantifying that a challenge?
Sure. So I'll tell you, this is a big challenge, I think, across impact investing. I think everyone can agree, quantifying it and agreeing on these measurements and standardizing them across investments is really difficult. We're really lucky we have an in-house GHG quantification manager who is a bit of a guru on that side. And actually, we have a report coming out later this month on inventories for the entire GTHA. So that's going to be really, exciting. But yeah, so we've done a lot of work there and a lot of research to try to standardize this whole process.
Yeah. Okay. And Jennifer.
Yeah, great. So at Copower, so our goal is to diversify across Canada and across technologies. So we have 3 small-scale solar projects in Ontario. But I guess my example would focus on LED. So you mentioned, how do we get the efficiencies down for buildings? And so the price of an LED bulb since 2010, it's fallen by 90% in price, and the we've supplied the funding for over 328 condos across Canada. And so we provide the funding, the project developer goes in, takes out all the inefficient incandescent lighting, and then replaces it with LED. And then so that way the building measures what they were using before in terms of electricity, specifically for light, for all the common spaces. And so we have a measurement of what that looks like afterwards. And so for that, for all those buildings, it's a total of 4,300 tons a year that we've been able to save, which is the lion's share of Copower's portfolio, which is 4,500 tons a year.
Wow.
Yeah.
Has there been, a question that just popped in my head, but has there been an effort to kind of coordinate among organizations like yours to quantify, in total how much, how many megatons of greenhouse gas emissions are being reduced through this work? Is that?
I don't know of anything yet. I know, using SolarShare as an example, we often go on your webpage because you have, if anyone's been on SolarShare's webpage, on the bottom, they actually have a list and it grows over time. So I think that's an example of what we'd like to go to. But it's great to hear that you guys are putting out a report about, we get that question quite a bit of, how do you have someone validating the numbers and stuff like that. So I think moving forward to some sort of institutionalized or codifying the impact in some way is probably where the market's going to go.
Right. Right. So we spoke really briefly about the challenge of quantifying. I'm wondering what other challenges exist in setting up these impact investments. I guess maybe I'll start over here with Steph.
Sure. Yeah. I think definitely the major challenge is that this is still a fairly new area, and there's really no recipe book or set of instructions on how a nonprofit or cooperative would go about issuing an investment to their community. And that's something that we're trying to change, and really the main reason that Tapestry exists is that we think that we can streamline this process and template it down to make it more accessible and less costly to all sorts of new groups that want to get into this space, who have amazing, iconic projects that will have huge impact within their community, but would be maybe a little scared to take this on their own. Yeah, so I think that's maybe a big challenge that we're trying to solve.
Do you find people are still nervous, or organizations are nervous to take that leap?
I think they're less nervous when there's someone there to hold their hand, and we've done it before. We've done it many times. We've worked with 7 different issuers on 13 different community bond campaigns, and we've helped to raise and manage close to $60 million now.
Wow. Rob, any challenges you can think of that exist?
Yeah,
probably a few.
Every day. But I would say by far our biggest challenge is working with the traditional banks. And the traditional big banks in Canada don't really recognize solar bonds or green bonds in general. And Jennifer, I'm sure you have the same issue. Do not recognize the bonds. So, you and I, who may have accounts at one of the big banks, if we go to our broker or advisor and ask about buying SolarShare bonds, they A, don't know anything about them, but B, they don't really have the systems in place to hold them in a traditional investment account. We have found the banks are a little more flexible when their client is a high net worth individual.
So that's why they're not working hard for me.
Exactly.
They just give me the blank stare.
But for a guy like me, they don't give me a lot of latitude. So, we're having issues dealing with the big banks and getting our bonds held in accounts at the large institutions. you know, there is some encouraging news. You know, as impact investment gains momentum, the banks are starting to pay attention. Because a lot of retail investors who can't hold their solar bonds or their green bonds at their traditional financial institution are moving to other institutions that have maybe a more open policy. And so once a large bank starts seeing money flowing out to other smaller institutions, they start to pay attention. And so we're starting to see some movement in that area, but definitely is something we come across.
Is that something others have struggled with as well? Yes, everyone's nodding.
Yeah. Just to echo off of what Rob said, our bonds are private placements, and so for most direct investing accounts, the banks won't hold it, and so it's that extra step that if they do want to hold it in a registered account, so they get the tax benefit, they can only go through a certain and a limited number of organizations, and so when you ask what's the challenge or what would you like the government to do, it would be to provide, you know, that same sort of incentive or tax benefit and help make our bonds eligible for the majority of distribution platforms, which are still the major banks.
Sorry, yeah, the other thing I was just going to say is transaction costs. I mean, a lot of these transactions are not, they're custom, they're not standard. It's difficult to find standardized documents, and so transaction costs are something that often holds people back from impact investing.
And so with the transaction costs, like, you walk me through why that might be more of a challenge with an impact investment, or?
Sure. So specifically, like if we're making an investment dependent on performance, or it has some sort of aspect of performance guarantee, or it has some sort of, well, any sort of guarantee involved, there's always a measurement aspect to that. Whenever you have something like that, you need custom legal documents. You're talking about all the money you're spending on lawyers, on papering this, and on making sure that the measurement's thorough, which is always, it takes a long time, and it's custom for every single transaction.
Are there any other challenges that the folks have faced, particularly in setup and getting these investments off the ground?
Yeah, I think, again, from a regulatory point of view, because we are a relatively new asset manager in the Canadian landscape, getting all of the regulatory approvals. We're an exempt market dealer, and we just got our license to be able to market directly to retail investors in 2016. And, you know, as one of the first to do it, we still have to go province by province to get provincial regulatory approval to be able to market to those citizens. And so overall, there's still a couple of provinces, sorry Manitoba, that we don't have yet, because it is that additional legal cost and time of applying for that licensing, going through that approval. And so having to do it province by province, it's taken us, we've been around for about 4.5 years, and our green bonds have been available for about 15 months. So you can see that time in there. It took us years to be able to get all of those approvals.
Wow. Okay. And so we talked about some of the challenges and some of the barriers. Are there any government regulations out there, either at the federal or provincial level, that are promising and are kind of helping to change things or move things along? Is there any good news story in that sphere? No.
Yeah, no, I think there are. I think, I mean, there's some new policies around virtual net metering and some piloting for that. There's some really interesting new policies around disclosure of energy usage in large buildings, which is really important. So we are seeing where there are definitely movement, and I mean, a lot of it comes from the retail appetite for these products, and as people become more aware of, you know, the potential returns, both financially and socially and environmentally, from these products, there's really a demand, and that's, I think, becoming obvious at different levels of government, and so policy is slowly, I mean, it's coming along. We're seeing movements.
And you mentioned virtual net metering. How would virtual net metering kind of help impact investments get off the ground, or help move this process further?
Yeah, so I mean, we don't do a lot in the generation space, but definitely with, you know, the feed-in tariff program ending, this is sort of the next realm of where do renewable projects go, and then how do they generate cash? So that's an interesting. There's a lot happening in that space. I don't know if you
if I can just jump in.
Yeah,
The FIT program that was started through the Green Energy Act back in 2009 has come to an end. It ended last summer, and so the big question to SolarShare quite often is, okay, what's next? What do you got up your sleeve? And net metering and virtual net metering is pilot projects will begin to take place shortly, and SolarShare is involved in a number of pilot projects, and this will allow a sort of give us another financial model under which we can operate.
We skipped over what is virtual net metering for those who don't know.
Yeah. So
what's the elevator pitch for virtual net metering?
So net metering basically is where you may set up a solar installation on site and generate power for the business or the whoever is occupying that space. Virtual net metering is a way to set up a solar installation remotely that produces power, feeds it into the grid, and gives a credit to the owner or somebody who may be leasing or have some sort of power production agreement with the owner of the solar site. I do also want to add that federally, the government did set up sort of a roundtable on social finance about a year ago, looking into how to make impact investing more accessible and more available. Nothing has been published yet, but we're expecting to have the results within the next month or so. So there should be hopefully some interesting news coming out of that will make things a little easier for those of us that are directly involved in the impact investing field.
Yeah, and I guess let's talk about that. What would make it easier? What are you hoping for coming out of that report and those recommendations?
Certainly, I made a submission a few months ago to the committee to, get the banks involved and work more closely with the banks, as Jennifer and I have identified. That's a real bottleneck for us in selling our bonds to the community.
I might add on the good news stories. I think there are good news stories in this space. It's not all, doom and gloom. I think, like Rob said, we're seeing the federal government showing a lot of interest in supporting social enterprise and also at the provincial level. So we received some support from the provincial government through the Social Enterprise Demonstration Fund. And I think, there is a lot of attention on the role that social enterprise can play in supporting the government and achieving their goals. So, I think there is a positive side. And the other part of it is that we operate under an exemption of the Ontario Securities Commission, which allows cooperative organizations and nonprofits to raise capital in this way. So just the fact that exemption exists, that we are allowed to do this work, is something that is exciting.
Interesting. Does everyone operate under that, or is that sort of a newer?
So nonprofits really have, so yes, they are under that exemption. So they are allowed to raise capital from their supporters. And co-ops are a little bit different, and they have provincial oversight, so it's different from province to province, and it is slightly more regulated, although it's not as complex as it would be, for example, for a for-profit organization to issue investments to the public.
Okay. Any,
No, that's so that's what Copower operates under. So we're an exempt market dealer. And so because we are for profit, and so there are quite a few additional steps.
And are there any, I guess, just to follow on the earlier question, anything else over here you're hoping to come out of that advisory group or that paper for government to look at, the group that Rob mentioned? So Rob, what was the name of the?
You know what, it's It's a really long name that I can't.
Okay.
It's like the social finance roundtable.
Social
or something.
finance
Right,
and
yeah, yeah.
impact investing roundtable.
Yeah.
So I apologize, I don't recall the name.
No worries. What would you like to see come out of that very long name?
Well, you know, like I think not specifically out of that, but I mean, there's a lot of space here for impact investors to be involved in policy. I think impact investing, sits at a really interesting intersection of nonprofit and finance and high net worth and policy. And I think there's a lot to be gained by, you know, engaging the impact investing sector in policy decisions. A lot of the things that we want to see at TAF are, you know, policies that support innovation, entrepreneurship in Canada and also in Ontario, and things that also open up financial markets. So again, engaging retail investors in impact investing, how can we do that more broadly? And then more specific things like ideas that have been floated, energy disclosure for private home sales at the time of sale. That was something really interesting. Anything the government can do around carbon disclosure for businesses. There's a lot of policies. There's in the US, there's a program called PACE where they do local improvement charges. I mean, we have the ability at the federal government has the ability to make CMHC mortgage insurance cover that. They don't right now. The provincial government can also do something around loan guarantees there. So there's a lot of space for the government to catalyze private capital by offering guarantees, by offering concessionary capital, first loss in a lot of these ecosystems. And that's what we really want to see the government do. We want to make sure they're not crowding out private capital, but we want to make sure they're bringing private capital to the table and encouraging that investment.
Right, yeah, let's talk about that a little bit. As many of you know, the government has been, through Green On and other initiatives, there have been more government grants and funding for energy efficiency and, you know, and other options to reduce greenhouse gas emissions. Is there room for overlap between, you know, private investment and government funding? Is it, as you mentioned, is it more of a consciousness of not crowding out private investment? How do those, is there a gap that needs to be filled by private investment? How does that kind of interplay work?
Sure. So this goes a lot to, you know, our role, how we see ourselves at TAP, which is catalyzing private capital. So generally our role in projects is that we like to find projects where, for example, the technology has some sort of demonstrable proof. So it's been shown to work, but maybe it doesn't have market acceptance. So our role would then be to use our endowment fund to finance a project. And now we're hoping that us financing that project at a market rate of return shows other investors that this is a financeable project. And then therefore, the next time that company needs financing, there's a market available.
So it's paving the way a little bit.
Yeah,
it's taking a bit of a chance sometimes, I guess.
Exactly. It's really like bringing private investors along for the ride and showing them that that the returns are possible while also creating, you know, a social benefit.
Okay. Any other thoughts on that that gap that may or may not exist between government funding, which we, you know, obviously do want to see, and private investment?
Yeah, I would echo what Nicole said. I think we're living in a time where government's increasingly relying, particularly on nonprofits, to provide services. And we're also seeing at the same time nonprofits having less access to grant funding, and particularly funding that they can use for capital expenditures. So we play sort of a similar role. What we say is that we mobilize community capital. I think, like a lot of the organizations that we work with will approach banks and they're turned away. So the role that I really see community bonds playing, and what's important to keep in mind, is that they're never the entire financing of a project. It's usually about 20 to 30% of the total financing. But just like you said, it can give the confidence to other investors to come in. So if you've got a group of 200 community investors who see this project as really important for the community and something that they're willing to put their money into, it gives the confidence then to other investors to take part. And we've seen in some cases where community bonds have been raised, the banks are more willing to make a loan or give a mortgage.
It's interesting.
Yeah.
And do you ever get people saying, oh, well, the government should be funding this stuff. Why are we, trying to build a sphere or relying on private investment to do this?
All the projects that we work on are really a mishmash of funding. So there's usually some government funding.
Right,
there's a low interest loan from, the county, and then there's a grant from the government mixed with some traditional financing from a bank or credit union, and then the community bonds are, maybe 20 to 30% of that.
I just want to remind folks as well that you can type your questions into the little question pane on the right-hand side of your screen if you have any questions that you want these lovely experts to answer for you. Yeah, we're going to continue. We definitely have some more questions to get to here. And so I guess we haven't talked as much about larger funders, like maybe pension funds, and institutional investors, I think you might call them. Have they been turning their eyes to impact investing, and how so? And I'll just open it up to anybody who wants to jump in here.
Yeah, I mean, I think there's been a broader movement in the market to increase the portion of funds that are invested in impact investing. There are a number of foundations, particularly out of the US, that have committed to 100% impact investing portfolios in the next few years. I know the Inspirit Foundation has also committed to 100% impact investing. At TAF, we have 2/3 of our portfolio in mandate-related finance. So again, there's a movement. The vehicles exist, and every day there are more of them. So you are able to still diversify a portfolio and be 100% committed to impact investing.
Yeah, I think like having an institution on board can definitely be kind of a big stamp of approval for retail investors. So I actually previously came from institutional management at Phillips Hager North, but for a retail investor, which Copower is focused on, can make an investment decision like this. And so typically when you have a foundation and pension plan, they go through many investment committee meetings before they finally make an investment decision. And so that process can take a year, it can take 2 years. And so with the retail investor though, they can make up their mind over individual Canadians to invest in profit and for planet, but also for profit. And that being said, though, we have had a lot of institutions say the supply isn't there yet. And so for a lot of the foundations or community foundations that have said, I want to put 10% of my endowment or my plan into impact investments, okay, yep, I've maxed out my SolarShare, I've maxed out my Copower, and there aren't a lot of other providers. And so co-ops are important at a community level, but it's also important, as more student endowments and then even community foundations make that, it's really going to be important to make sure that the supply is there as well. And your comment on, is there a gap there that government isn't doing? And for one of the main reasons that Copower was founded was because the small scale projects weren't getting access to capital. Like, if you have $100 million bridge, you can get a pension plan or an asset manager to fund it, and so it doesn't have a hard time. But if you're $1 million solar project or geothermal project, you don't have the same access to capital. And so it also provides a good market opportunity. So if you can give individual investors a good rate of return and just kind of create a bridge that connects those two together, it's a good market opportunity for a lot of projects and a lot of investors at the same time.
Yeah, I can agree with that. So at TAF, to bring these community foundations on board, we've been doing a lot of reselling of our investments. So we'll make an investment, hold it for a few years, prove that it's performing as anticipated, it's profitable, and then we'll resell it to a foundation. And that's really a way for them to sort of dip their toes into impact investing. They're buying a product that they can already see is performing, and it still has a guarantee from TAF that the performance will exist.
And you've helped them. You've helped do the due diligence.
We have, yeah.
So if I'm starting out a very small project and no one wants to take a risk on me and my 5 solar panels or my tiny building with retrofitted windows, then potentially TAF could step in and help with that. Or okay.
If I can just jump in, Sarah, to echo what Jennifer said, there is a lot of foundation money out there. They're just having a hard time finding impact investments. A lot of foundations have moved to a best practice of 10% of their investable endowments go towards impact investing, and they're having trouble finding those investments. And then there are, as Nicole mentioned, InSpirit Foundation, there are foundations like InSpirit who are moving towards 100% impact investing and are finding it very challenging.
And cities too. Some cities have pledged to go 100%.
For sure. Guelph, just pledged to go 100%.
And Rob, you probably have the problem, it's not a bad problem to have, but where they say, I can only have so much of my portfolio in SolarShare. So then they're limited with how much that they can invest in you as well.
Yeah, and we also put a limit on investments. Part of our mandate is to engage as many people as possible. And, I think SolarShare would rather see 100 investors put in $1,000 than one investor come in for 100,000. Just because we can reach more people and engage more people that way. Also, SolarShare's bonds are backed by our net assets. So we will never sell more bonds than we have in net assets. So we're also pushing up against a cap there. And so if a foundation with a sizable amount to invest comes along, we're, to be honest, we can be at times reluctant to take that big investment because it's pushing up against our cap, our investment cap.
We have an audience question here that I will read out. Is there a company or person we could work with to assist in developing a funding strategy and plan for a large commercial scale project and work with impact investors to fund? Stephanie might be a good person to handle that.
Yeah, so I think it would be Tapestry, assuming that you were either a nonprofit or a cooperative organization. So we'd have to get a little bit more information as to what the project is and your organizational structure, but definitely that's what we do.
Great. Yeah, and there may be CEA members out there who are considering jumping into just such a project. So Tapestry specializes in helping those organizations through that.
Yeah, definitely. So yeah, we can bring organizations all the way through structuring their investment to raising their investment and then managing it long term.
Right on. And what's your website, just so this person can
www.tapestrycapital.ca.
Great. I should also, I'll send a follow-up email with info from all of your organizations as well, so people know that. We started talking a little bit about municipalities. Does anyone else have any thoughts on how that, it looks like we may have a gap of more people wanting to invest in impact investments and more municipalities and larger institutional investors. How do you think that gap is going to be filled? Is it going to be filled? Are we going to end up with a lot of municipalities, say, out there fighting over the scraps of renewable investments or energy efficiency investments?
No, look, there's a lot of work to be done in the space to meet Canada's goals, to meet Toronto's goals, to meet Ontario's goals in terms of reduction of emissions. It's really a lack of investable products right now, but the opportunities exist. And so really there's a lot of opportunities for entrepreneurs to go out there and put these projects together because there's a lot of capital looking for the opportunity to invest in them.
Yeah, definitely. Yeah, I think one thing on the government side, we're seeing so many municipalities making great action plans, putting together community energy plans, but then they're laying on a shelf and getting dusty and none of them are being put into action, which is sad to see because some of them are really well fleshed out. And I think one thing that municipalities or government in general struggle with is actually they don't specialize in project development like, say, SolarShare does. And so I think that there's a lot of opportunity even for municipalities to raise capital through bonds, but also to work in partnership with some of the renewable energy co-ops that are already working on the ground that have strong roots in the community. I mean, that's what renewable energy co-ops are really good at, engaging the community, getting projects built and operational, and raising community financing for community-owned assets. So I think there's a lot of potential there.
Yeah, for municipalities, they have the ability that if they take on a project and it goes over, they can raise taxes. And so if you are a large municipality, you can raise green bonds. So the City of Ottawa last summer raised 30-year debt at just over 3%, which is incredibly low. And that was specifically to fund their light rail transit. And so they had a specific mission. They're going, raising money. They took it public. It was all institutional. It was oversubscribed. And a lot of retail investors wanted to have access to that, even though, a 3% 30-year bond is just, it's crazy. It's incredibly low debt.
Right.
And so if you are a large municipality, and so Ottawa, Toronto, Montreal, Vancouver, I mean, they're the biggest ones, but even larger cities that have, populations of over 100,000, you can do a raise privately amongst investors, and then it can be backed by the taxes of the city. And so municipalities do have a couple of levers that they can pull.
And you said Ottawa did that to fund a light rail project? Wow.
Yeah, so when they raise that, they have to directly put, they're not allowed to take that money and put it somewhere else. So their prospectus specifically outlined what that project was going to go to.
Wow. Yeah. Have you seen any other examples of municipalities or even provinces or larger government institution doing that?
Yeah, well, the province of Ontario announced a couple of months ago that they're going to do another large green bond raise. And so provinces can issue and do issue public debt pretty easily and at pretty high rates. Like it's only 40 to 50 basis points higher than a Bank of Canada bond. So for a retail investor, you can purchase a green bond that is backed by province of Ontario. They are still rates that are lower than a SolarShare or a Copower rate. But again, I mean, it's a great product, and again, it's backed by the balance sheet of a province, and so it's credit worthy. It's definitely investment grade, and it's a good option.
Mm-hmm. And I know some people are signing up because they want to see that return on investment. How much do you think the desire to be a part of a movement factors into these investments?
I think from a Copower point of view, talking to investors every day, that's exactly it. They're looking at their portfolio and they have mutual funds that don't really mean anything to them. So if I have an ETF that's based on an index, I don't have any relationship with it. But if I have a SolarShare bond, and I know what it's funding, and I can go to the website and it tracks specifically, what my offset is. And so as an impact, Copower has that too. And so you can see specifically how much carbon you're doing, but it's putting your money towards something that you believe in and something that you value. And I think, going forward, studies have shown that millennials are increasingly more interested in this. But we have investors that are grandparents as well, but that really is where the market is moving. Is they want to, if you're an investor and you have a lot of hard-earned money, you want to put it in something that you like and something that you love and something that you can see doing good.
Yeah, and I think further to that, there's also, as investors realize that there is alpha to be earned, right, on these investments. There is excess return on impact investing, and we're seeing a lot of research reports coming out. Impact investing has been around for a while now, and we're seeing more and more reports coming out showing that there is an alpha there, that we can earn excess returns while creating social impact. So,
right. Yeah. And I think the work you're doing at Tapestry is interesting in the sense that it's leveraging people who are already part of a movement, potentially, who are part of those organizations.
Yeah.
Do you find that those investments are an easier sell?
Yeah, definitely. I think in the work that we do, when we help an organization to raise community bonds, it's always in the name of the organization, and there's always a really strong local tie. So we see investors getting just as excited about the financial return as those bragging rights to be able to say, I made this happen. So that local, having it local and be an iconic project that's really meaningful in the community makes it a pretty easy sell. And I think everyone said this today. But really the limiting factor is the number of investment opportunities. The investors are out there. People want to make value-aligned investments, and I think it's just a matter of creating more of these investable projects, really.
I think every investor that I've ever talked to, the first thing that they tell me is, oh, well, I've invested in SolarShare, or oh, I've invested in ZooShare. And they can't tell me the names of their mutual funds, but they can tell me every single name of their impact investment.
Yeah, and that just shows you that there's just such a thirst in the marketplace for investments that align with people's values. And, you know, thankfully there are more and more coming online, but right now supply does not meet demand.
Right. So we're coming close to the end of our webinar here. Do we have any more burning audience questions? If there's still time to type it into the side there if you do have a question, if you want to get one last one in. I do want to ask, kind of blue skying it for the future, where do you see, I mean, impact investments are gathering momentum now, as we're hearing. Where do you see this form of investment in 10 years from now? Like, how do you think this is?
Oh, it'll be the standard. You know, if you look at, it was back in January, Andrew Fink, who's the CEO of BlackRock down in the US, came out saying basically BlackRock, who is the world's largest asset owner, will only be investing in impact investments going forward. And so this is a bit of a call out to business internationally to look at the way they do business and to take into consideration not just the financial bottom line, but the social and environmental bottom lines.
Yeah, we're working with the Macdonald Foundation right now, going through their In a Week program. And so part of that is putting together the theory of change for Tapestry Community Capital. And I can tell you that our ultimate impact statement, so long term, like maybe more than 10 years out, is that community investment will be the new normal. And I really do think that that is possible and achievable. I think there's so much interest there. It's really just a matter of finding those community champions who, you know, have a great business idea, who are going to open this up to their community and allow them to invest.
Yeah, I mean, I think the 2017 Global Impact Investing Network's annual report put the floor of the impact investing market around like $114 billion based on the responses that they got to their survey. I mean, that's a large amount of money. It's not, I mean, there's obviously a lot more money floating around in capital markets, but it's a large amount of money. And there's definitely, I see more and more interest in it on a daily basis. Articles coming out, people being interested, new investment vehicles. It's gaining a lot of momentum. And I think along with that comes a lot of data. We're getting to see a lot more data on impact investing, and that's, you know, educating a lot more people. But hopefully, yeah, hopefully we see the market, the entire capital market shift in that direction towards a focus on impact, on resiliency, on social outcomes.
And I guess I should also ask, you know, as an add-on, how much of an impact on climate change do you think that this could have?
Yeah, well, our goal is complete Canada domination. Like our goal is to help Canada reach a low carbon future.
Yeah.
And so that means, you know, there are over 30 million Canadians, and that represents over 4 trillion in retail individual assets. And so even just capturing 10% of that, you know, if we could have, let's say we have 300 to 400 billion that we're putting specifically for small scale distributed clean energy, you know, that would go a long way to helping Canada reach our low carbon goals. And so, you know, Alberta is slowly shifting from just getting rid of coal right now. And so in the meantime, they're still going to have natural gas plants, but in 10, 20 years, where net metering is the new normal, you're going to have less of a reliance on large utilities, and so you won't need the large grids. If you're producing your own renewable energy, there can be massive shifts, and we really do think that Canada could be a leader in the world for getting to a low carbon future faster.
Mm-hmm. Along with obviously strong government action, which is
Yes.
something that always prioritize and push for. So, did you guys want to add anything on about potential climate change impacts? I know I asked that after we went to you, but
I think, that there's a lot the government can do to make these projects more financially sustainable, particularly for renewable energy co-ops. So with net metering, there are some challenges with third-party ownership, and it looks like it could become quite an onerous process and may have to become registered retailers. So there are lots of things that the government could do to make it easier for these groups to get projects up and running.
Right. Yeah. Okay, and to kind of complementary work together.
Yeah.
Is there anything else anyone wants to add before we close this out? It's been an awesome conversation. Thank you so much for coming out and chatting with our members. And I know that if our members do have more questions as we move forward, and maybe you watch it online after the fact, you can always send them in to me at the Clean Economy Alliance, to Sarah, and I can direct them as needed. I think you probably have all received my email, so you can also go to cleaneconomyalliance.ca, and there's lots of information there, and we're going to be posting a blog with some highlights from this conversation, as well as a video of everything, so you can watch it over and over and over again.
Thanks very much.
Yeah, thank you.
Thanks for having us.
Okay. And thanks everyone for joining us. And thanks Alan and Tessa for behind the camera there, making sure everything's working. So a huge thanks to them as well.